All right, gonna get started here in just a second. All right. All right. I'm just gonna go over the Bitcoin chart relatively quickly. I might take a look at Ethereum and probably take a look at liquidity maps, things like that. Just kind of take a look at what's been going on, what I expect to happen, things of that nature. And I've got a lot of construction going on in my house right now, so my house is kind of a mess. That's why I don't have my camera on today. It's probably going to be going on for a couple weeks, to be honest. So not exactly sure. Um, I don't really have a background worthy of displaying right now. But anyway, um, appreciate you guys either joining the stream or rewatching the stream. Make sure that you smash that like and subscribe button. Really helps me out with the YouTube algo. Just kind of getting this out to more people. I know that I post the links in some Discords and on Twitter and stuff, but any retweets and stuff of the announcement of the live stream definitely helps me out, along with any kind of engagement helps get the stream out to other people and lists it on their recommended videos and stuff. So let's take a look at what we got here going on the weekly chart, and I'll touch lightly on basically what transpired from the FOMC real quickly. Basically what ended up happening is obviously, like, everyone was on the same page with a 25 basis point hike. That's why on the day of the FOMC, we didn't really see very much volatility happening on that day. That's because pretty much everybody was on the same page of what was going to be happening. So while the press conference, and I did stream that live, you guys can go back and watch that live stream and rewatch that for like my commentary at the end, like the last 20 minutes or 30 minutes or so. But basically what I went over is, okay, the press conference and the people asking questions, they were constantly hounding him on, okay, well, is this the end of the rate hikes? Does this signal a pause? Does this signal, switching to quantitative easing versus tightening? Asking for clarity on, okay, now that we've reached 5.25, which is what the Fed targeted, are you guys going to reverse now and stuff like that? Obviously, Jerome Powell didn't make too many comments on that because he doesn't want to, one, manipulate the markets. He doesn't want to give anybody false hope. And on top of that, he just doesn't really want it. The worst thing that he could do is stop tightening too early or over tighten. So he's kind of in a precarious position, right? Literally the weight of the world reserve currency and the weight of the world on this man's shoulders. So he didn't really obviously give very much clarity on like, oh yeah, sure, we're going to pause. Now, that said, they did reach their target level, which was like 5.25%. Inflation does seem to be waning, but as he mentioned, it looked like it was waning before and then it popped and sprang right back. So they don't want to do too little, but obviously they don't want to do too much and start, nuking all the markets and stuff like that. So while our labor market in general is very strong, here in the US, unemployment is down around 3.5%. It's like the lowest in like 55, 60 years. You've got 2 jobs for every 1 unemployed person, very low unemployment claims. But because of the Fed's actions, basically what's happening is, I wouldn't say that that's the sole reason why some banks, have started failing or whatever. That's not the sole reason. A lot of banks are just overextended and, just had really odd business practices and stuff like that. Now, obviously, the Fed and rate hikes and stuff do play a role in that, but it's not the sole reason why banks have started failing. That's not it at all. However, with the rising rates, it is starting to cause a little bit of a credit crunch. So that word has been floating around a lot, like, oh, credit crunch. Well, what is a credit crunch? So when the Fed raises rates, right, it's more expensive for banks to be loaning out money, right? So banks loan out money in the forms of mortgages and car loans and credit cards, personal lines of credit, and things of that nature. Well, what a credit crunch is when the Fed is raising rates, it's more expensive for the banks to be lending out money. Ergo, they lend out a lot less of it. So I think what's going to be happening is, even if the Fed does decide to pause, which I would be inclined to think at this point with how much they've done, because again, like I said, he doesn't want to do too much and, start destroying markets, right? Like, that's not a thing. He doesn't want everything to crash and burn. He wants it to be like kind of a controlled slowdown and a controlled demolition of the economy, so that it, so that we don't like go into an unnecessary hardcore recession or a depression or whatever. With that said, I do think that he's going to pause and that they're going to leave the rates where they are. That is going to contribute to a further credit crunch. It is going to be harder to get credit. It is going to be harder for businesses as well as consumers to be, getting credit cards, getting business loans, getting mortgages, getting, whatever, just any kind of lending is going to be more expensive on the banks. It's going to be the kind of thing where they're going to be just giving out less money in general because it's more expensive for the banks to do so. Now, that said, that also means that the existing loans that the banks have already loaned out are more expensive. So that's what's contributing to a credit crunch. I just hope that kind of defines, what's, like what that actually is. Because I know that word has been getting thrown around a lot. But basically, to sum up what the FOMC and Jerome Powell and stuff, no, he didn't give clarity on if they're pausing or if they're, going to switch to easing or whatever. I would be inclined to think that there's not going to be any kind of rate cuts this year or maybe even next year. That is not on their horizon at all. Nobody that sits at the Fed is on board with that. It's way too soon to even be discussing that. However, I do think that if they are not if they're not ready to pause now, I think what's going to end up happening is maybe they just do another 125 basis point hike and then pause. But me personally, I'm more inclined to think that they end up pausing now instead. So I think that that's probably what's going to end up happening. Now, what does that mean for the markets, right? Before I get into Bitcoin, we'll take a look at the dollar real quick, right? So credit's getting more expensive and, we're tightening and, all of those things are going on. So that's been leading to this, this is basically, what is illustrated very clearly here with the chart, right? So like all of this, this was all like not good. Like this was all of the effects of like printing money. It really decreased the value of the dollar. And then what happened is they started crazy tightening, right? Like they had a couple 25 basis points, back in early mid 2021. Then we got 50 and 50 and 75 and 75 and then 50 and then, 50 again. And now what's happening is, because of the credit crunch and, all of that stuff and, just the dollar in general, the effects that this has on the dollar, it's starting to kind of moderate and the dollar's kind of starting to come back, to kind of somewhat of a normal level here. If you go back to, we've been this high before, obviously not since, 2003. But, at our peak, it was at a nominal rate of, 115. That's something that we haven't really seen since the dot-com bubble burst. So, that's very, very elevated. That's very high. This number definitely needs to, start coming down or whatever over time. And that's pretty much what's going to be happening here. So I think, Now, what I would say is that we're at a point where I would be probably surprised if we started seeing the dollar, pushing above like 105, 106. I'm more inclined to think that we get something like this and it starts kind of, like stabilizing, in some kind of a downward trend here over the next year or so. So that's kind of, how I feel about this. If we bring it down to a 4-hour chart, we did just get a breakout of this big trend line here. No retest as of yet, but it looks like we're coming up. We're testing this trend line that we had at about 102.65, and just kind of trying to climb back above that. But and this is why the markets, especially Bitcoin and stuff, have taken a downturn. I want to say that this chart is more reflective of what's going on with Bitcoin versus like, the actual indices like the S&P 500 and stuff. So, the dollar starts rocketing up, Bitcoin starts flipping over and moving to the downside. So I'm going to move on here. We'll take a look at oil just real quickly, kind of zoom out to this daily chart here. It's just a good idea before I go over cryptocurrencies to just kind of get a feel for what the overall market is, especially commodities and stuff. The more that I know that this stuff is kind of boring for a lot of you guys because it's not really, you guys aren't like stock twit or whatever you guys are like, crypto Twitter. But the better that you guys can understand the correlation between legacy markets, especially when it comes to the dollar and, major commodities like oil and, like how bonds work and those relationships that they have, the better that you're going to understand in general how the markets are correlated, which ones are inverse correlated, and how to plan ahead based on what certain things are doing. So, like oil right now, like oil is down. Why are gas prices high? Well, that's more of like a political thing. That's not necessarily related to the chart, but understanding that relationship is very important. So just kind of keep that in mind. Like obviously right now, like natural gas, like it's at its lows, right? Well, why is it at its lows? Well, I mean, it's summertime. No one's really using a lot of heat and oil, to be heating their homes right now. So in general, the price of natural gas has come down because it's summertime and no one uses natural gas to heat their homes when it's 100 degrees out, right? So that's why this is lower in general. Like it's going to be higher in the winter, in the fall and the winter months. It's going to be low in the spring and the summer. That's exactly, kind of what we've been seeing here. Obviously, this was super elevated during all of the inflation and what was going on with all the uncertainty with war and the political aspect of it. But in general, this has come down. One, because we've kind of figured out a lot of that trade stuff. And two, it's just going more into the spring months here. Like normally around January, February, it starts really tapering off. So that's kind of what's happening with that. If we take a look at the S&P 500, this level here at about 4150 has just been literally like the stone wall of resistances here. I mean, we have tested this many times since 2022. At this time, 2022, literally a year ago, we have tested this now. I want to call this one, but not really. So 1, 2, 3. This is like 4 times that we've tested this up here. This one time we got a throw over. It just did not hold. We got a small bounce at support and then it just nuked right through it. Had a really nice rejection here. And then we gapped down for a leg lower. I'm pretty sure everybody remembers this. That was a lot of fun, right? But anyway, since then, the markets have kind of just moderated and, it's just been very, very choppy through here over the last year. Lots of uncertainty in the markets, lots of talk about inflation, the war in Russia and Ukraine and all of this other stuff, Biden policies, the politics that play into this, earnings reports and, layoffs and stuff because of, quantitative tightening with the Fed. It's, people are saving more money than they're spending now. So things are kind of flip-flopping. And it's just caused a lot of just flat, choppy ridiculousness here over the last year. So this has been a very historical level. When you zoom out, I mean, it goes all the way back here into 2021, but very historical level of resistance here. And this is a very important key level to be watching. Now, over this last, month or so, it's been extremely choppy. Very little opportunity for big trades in here unless you're trading individual stocks that, are uncorrelated to what is listed in the S&P. Obviously, it depends on what sector you're trading and stuff like that. If you're more into legacy stocks, you know what I'm talking about. But in general, this has been extremely choppy. This isn't really the price action that you want to see. This big trend line that we had since 2022, right, all the way down, this isn't a very forceful breakout. In fact, I kind of want to say that this is a failed trend line now, because we got one bounce off of it. We broke below for a throw under, but then we just had this like slow grind up and we're just stagnating now. Like everything is really stagnant. The volume has really dropped off here. Our indicators are starting to run flat. It's just not really a good sign here on the daily chart. You know, when you're looking at things like this, 4 hour 2 OBV flat, indicators really choppy and or they're flat. Same here with volume per bar. I mean, like this is just really abysmal here. Like you don't want to see volume on a major indice just really die like this. That's not really what you want to be seeing. But very, very low volume, very crushed inside a range here, very, very tight range. This is the range that we need to be breaking up here around 42.55 or whatever, 42.70 for a breakout. And, you know, these lows are local lows here at about 40,050. Those are the lows that if they break, I would suspect that we see something like this and come down, you know, into this 38.50 level for a retest again to sweep our overall monthly lows. Okay, so really, really tight trading here on the S&P 500. If you're a futures trader, you probably haven't been having very much success in here. I know that I wouldn't. This is not really the type of environment that you want to be trading in. You want like a really clear defined trend. We had a good one through here for the most part, and through here to the downside. But this lately, from the middle of the beginning of April till now, this has just not been happy trading here. Very, very choppy all over the place, indicators included. So now we'll take a look at Bitcoin. Thank you for sticking with me. I appreciate that. If you're new to the stream, make sure that you press that like and subscribe button, and check out all the links down in the description below. I know that I'm going to be going over, I'll bring these up now real quick. I'm going to be going over the liquidity heat maps as well. Those are brought to you by highblockcapital.com. No, I'm not sponsored, but yes, I plug them because I use these every day. There is a link in the description below if you're interested in finding out more information about this platform, what they're about, and pricing and stuff like that if you guys need information. So let's come over here. Okay. I'm gonna bring this up. So we have ate through some of these shorts. I'll get into this here in a little bit, but let's take a look at the daily Bitcoin chart first, and then we'll kind of dig into that. So before I even take a look at any indicators, what I want to be looking at first is just kind of where we are in general. So again, very choppy. Okay, since March, we've got a very clearly defined range here, as you'll see on the 4 hour chart, and this is basically a throw over. And now we've just tested liquidity here to our downside. Very strong buyback here, but it's still closed as a pretty nasty candle. Very, not much going on so far with the new daily candle, but again, it is near the end of the week here. So, but normally wicks like this, especially on like higher time frames like this, normally that's significant of either a bottom and some kind of a reversal incoming. So that's kind of what I'm hopeful for at this point. We have seen to now, what is it, a perfect 382 tap for a retracement. Typically wave fours are more shallow than wave twos. Okay, so if you count this whole thing as a wave one, and this was a expanding diagonal here. Okay, so then if you count that up to here as a wave one, we retraced almost 0.5 for our second wave. And again, you can see here, look at this candle formation. We had a really nice hammer down here at the bottom, really long wick to the downside, and then it started reversing. That's kind of what I'm hopeful for, some kind of symmetry here. But again, this would be assuming that this whole thing is a 1. This was an ABC for a 2 here. Okay. This was our 3, and then this is some kind of a 4. That's possible. And I'll show you why. Is again, it just really goes to fib retracements and stuff. This wave was 0.5. This one is 382. But it also abides by the rules of the extension, right? So if this is wave 1 and you project that against your count of wave 2, it did reach over our high, was above the 100% mark. So this is technically a valid wave 3. So we could have one more leg up here. Obviously not too sure. I would tend to think that, especially if the Fed is considering pausing rate hikes, and we're going to have more details on that. I don't believe, when is that coming out? It's either this 1, 2. I thought it was 3. So I think it's on the 23rd. Let me just double check that real quick. If you go to federalreserve.org and you look at what's happening here. Okay. If you go to the Federal Reserve's website and you look at their calendar, I think we have the minutes on the 23rd. Money market measure. Oh, no. Oh, yeah. Wednesday, the 24th. Oh, okay. Yeah. So Wednesday, the 24th, we have the Fed minutes. Okay. So this is really important here. And the reason why is because that's when they clarify or change statements that they previously made at the actual FOMC rate hike decision. Now, this is important because, and a lot of people aren't really paying attention to this. The reason why this is important is because I think in this minutes, we're going to get more clarity since they've gotten more information about if they are actually going to be pausing or not. Now, in that scenario, like a pausing scenario, if that ends up happening, this could 100% be the bottom of a leg here. Now, obviously, this is like a couple, 3 weeks away, which would mean that maybe we just chop around, okay, until then, and we see some kind of like bottom formation, some kind of a reaccumulation zone here. That would be my first thought. But at the end of the day, I'm going to go out on a limb here and say that if we get more clarity on the Fed deciding to pause for the minutes in 2 weeks, that is 2 weeks, right? Yeah, 2 weeks, basically like a week and a half or whatever. If they decide to pause, I think that that's going to be bullish as hell, because everyone's going to know, okay, like even if they're pausing or whatever, that's bullish. No more rate hikes. That means that while the credit crunch continues, banks will be able to like kind of mitigate disaster because now there's clarity from the Fed that they're not going to be pushing rates any higher. People can plan around that. That's a good thing. I think that overall is going to be bullish if they pause. I think that that's going to be a bullish catalyst. Now, if that ends up happening, I mean, it's good all around, right? Like obviously it's good for Bitcoin. Obviously it's good for the S&P 500. We'd probably finally break out of these range, and retest our throw over high here at about 4,300. Anything above this, I'm full bull at that point on the S&P 500. What does that mean for Bitcoin? On Bitcoin, that means that we would probably see some kind of a consolidation here and then end up pushing higher. Now, technically, our range hasn't really broken here. We're floating like directly at the bottom of this. Obviously, if we do get multiple consecutive daily closes below this monthly level, then I would be expecting, like something along this line to be coming down and retest our previous monthly support and resistance level at about 25K. This right here is the most obvious move to me because as you've seen recently, everyone's claiming that this is a head and shoulders. Holy crap, we broke down. While that is still possible, this doesn't really have head and shoulders vibes to me. And the only reason why I'm saying that is while this is a massive leg up, and then you got a higher high, an equal low, a lower high, and now it looks like we're putting in a lower low here. typically this isn't the price action that normally you want to see more defined price action, right? Like see how really curved and flat these shoulders are here. Even with the head, it's like really curved, like it's not sharp. It's not a sharp move. Normally for head and shoulders patterns, I mean, like you want to be able to see like really clearly defined price action, like sharp moves, right? Like that's the kind of price action that you want to see. And instead of getting that, we got more of, this. And it's kind of like, I don't really like, is that really a head and shoulders when it's supposed to be like, very defined, I don't really know. Obviously I could be wrong. They come in all, shapes and sizes and everything. I definitely could be wrong here. However, I would be more inclined to think that, with an impending, confirmation on a Fed hike pause, I'd be more inclined to think that this is probably some kind of a fake. It certainly wouldn't be, like a full-blown reversal pattern, because in order for this head and shoulders to be valid, I mean, you'd be talking about having to break these lows down here, in order for it to actually be a reversal pattern. Like this would complete the head and shoulders pattern, and then this would confirm it as an actual trend reversal. Because again, getting back to what I said at the beginning of the stream, this all looks like one giant 5-wave sequence to me, where we've got a 1, an ABC for a 2. This is our 3. This is a 4. And then we still have one more leg up. That doesn't mean that we can't hit 25, but technically our trend here isn't broken until these lows way down here at 20K have been broken. Now, I know that that's kind of like, I know that I'm probably going to catch a lot of flack for that. Like people probably don't really want to be hearing that. Oh my God, 20K, like 20K never again. Way back here, we also said, 20K never again. This is the bottom. And then we capitulated some more. And then, we're floating around 18, 20K, never again. We're going to reverse from here. And then FTX happened and we got another black swan. Next thing you know, we're at the mid 15,000s, for a while. Like this consolidated for quite some time here. You notice that, this consolidation here, it was just very, very choppy, before the markets reversed. We are kind of seeing that same choppiness here at the top. But again, given the market environment, and what the Fed is likely going to announce for the Fed minutes in a week or two, I'm more inclined to think that we move up from here, not down. That's just my best guess. Like I would, and when I say that, I say, I don't think that we're breaking 25K. That's what I'm really getting at here. Could we move lower from here? Yeah, certainly. But I really don't think that 25K at this point is going to be breaking. This is a very, very, very major level, of support and resistance. And it has been since August in 2022. This is a very major level that we finally flipped with very solid volume. This is the main place where people want to be bidding. So, would that really confirm a head and shoulders? No, not really, because it has to be equal length to the left shoulder. And that's way down here at 20K. I don't think that we're revisiting 20K anytime soon, especially if the overall market landscape might be turning around for the bullish side. So that's kind of where I stand on that. Let's go ahead. We'll take a look at the liquidity charts in a little bit more detail here, just kind of get a feel for where we are in the lower time frames. Before we do that, I'll take a look at this 1 hour chart. We've just been getting absolutely brutalized since the beginning of the month here. Just, leg down, sideways, leg down, sideways, fake out for FOMC, or at least I think that was the FOMC. No, FOMC was last week, so it was like a non-event. It was back here. Oh wow, it was way back here on the 3rd. Yeah, this was our FOMC. This was like a non-event. We pushed a little bit higher and then we just kind of stagnated, rounded off the corners. So there's that. Anyway, for the most part, this has been playing level by level. Okay, nice rejection here, nice support bounce here. We got a little bounce here, throw over, just kind of stagnant. You notice around these median lines, we get a lot of consolidation and a lot of choppiness. So that's kind of like a key, like up here, this acted as resistance again. Once we broke back down through this this median line, we didn't even really hesitate here. We kind of used it, but it broke down, used as resistance, broke down further. This obviously major support down here into this level in about 26K. Very major level. We've bounced pretty strong from here. So the first thing that I'm looking at is, you know, we almost got it too, is a retest of this support now turned resistance. To be honest, all these levels, these should be red. I just haven't really changed them yet. I haven't been trading very much. I've had a lot going on at home. Had a lot of construction going on. Just a lot of stuff going on. It's kind of a weird. This isn't really a midline there, is it? I think I may have accidentally moved that. It should be there though. Anyway, really strong bounce coming into this 26K territory. And it looks like we're going to see some kind of of rejection here. So this would probably be the short up here. Like if I was looking to be entering short here and be planning for like 25K as like my max opportunity to be buying, this is probably where I would be, planning to be laddering in to be going short, probably stop, playing conservative, stops above these highs, and, playing this to the downside, right around that 25K area. Now, the 25K area is not shown here because that's a higher daily level. Okay. That's our monthly level, excuse me. That's a big monthly level. Okay. So that's why I don't have it way down on this 1 hour time frame, but 25K super key monthly level. It's also a very key psychological support level as well. So not a very nice looking candle here. Kind of got like a pin bar to the top side. Not really what you want to see for some kind of a continuation. If we look at the volume actually is really strong here. Per bar, at least. Indicator looks good. How's our OBV look? OBV looks solid. The only thing that concerns me is that this was very recently. And when you look at this consolidation compared to the consolidation on the OBV, what do we got? We got a lower high in that price action, but we have a higher high. And it just ticked up. That was weird. And we're getting higher highs on the OBV. So that would be, that's kind of a red flag for me in terms of like seeing a continuation. The volume per bar looks great. But at the end of the day, the on balance volume, which measures spot, is not looking so hot compared to here. So obviously there's ways that we can look into that. There's other tools on High Block Capital as well that we can use for that as well. You can just look at the net positions heat map, and that'll tell you real quickly. Okay, so if you look at net positions for the last like 7 days and just kind of run that, that'll kind of tell you like the majority of where the positions are. So like this was like a huge short for people, right? So like max pain for shorts is like way up here. So this just kind of tells you where the open interest of the positions are. Okay. So if you've got a really bright yellow section here at 28.3 or whatever, that's probably 10 or 11 million, in spot value. And this is just on BitMEX. Then you can tell that, okay, like this price popped up. Somebody bid this up so that they could fill their shorts, and someone's really heavily short from here, and maybe added to their position in here or whatever. But in general, like this is where people want to be buying the breakouts. Okay. So see how it's like negative 10 million here. Okay. That's what that means. People want to be buying. Okay. Anyway, we're going to take a look at the actual liquidity right here. And let's go to the heat map first. See, we are really close to sweeping the rest of this liquidity to the top side. It goes up to about 27.4. And if we look at our chart, that is basically this midline again. So that would basically be seeing, something like this. And then this right here would be the question mark, is like, okay, where is it going to go from there? I could break back down, or we could use that as support and move higher to the top side. So that's a possibility. But in general, if you look at the individualized levels here, I mean, there's just a massive wall. Certainly right in front of us, there's tons of 50 and it's a 50. What are these? Yeah, so there's a bunch of 50s and 25s in here. There are some hundreds in there as well, but I think most of the hundreds are actually up to that 27.4 level, 27.6 it's looking like on here. But any push higher than that, you definitely see a lot of pressure on these short liquidations on here. Now, obviously, that doesn't mean that all of these are going to get liquidated, right? Like that's not what that means. This is just where the estimated liquidations are. Most people obviously close out their position, or they'll add to their losers before they end up getting liquidated. That obviously adds more fuel in whichever direction the price is creeping towards. So that works for the downside too. Not very many longs to be liquidating here. Even if we move down again to the bottom side, it's looking like this 26.2 area is most likely support, where some of these last 100x ones are. You would need a pretty solid push in order to be coming down here into like the 25, mid 25K zone. Again, that 25K zone, if we did get down there, that's like max bid for me. I'm definitely going to be bidding that if we end up getting down into 25K. That is a thing. For right now, though, it looks like we're going to slow bleed, like slow grind up through the weekend. It's Mother's Day weekend here in the United States. So I know I'm going to be busy this weekend. That's not like a major holiday or whatever. So I don't think that that's going to have an effect on price, but it's if it does have an effect on prices, it probably just means that price isn't going to move. But let's come back to our heat map. I want to take a look at the 7-day real quick. And yeah, there's not really too much in either direction. This is probably going to be end up being like a slow chop weekend here. We've got a little pool here around 28.3, 28.5. Again, that lines up really well with what I was predicting up here. So if we do keep getting a push to this top side, that max short area would likely be like 27.5. So, if I was on the 1 hour time frame and I was trying to lay bids down on this to catch more downside, then what I would be doing is, I'd be putting a ladder here, I'd be putting a ladder here, I'd be putting a ladder here, and then I'd probably have a stop like, above 27, above 27.5, probably like 27.575 or something. That would basically make, let's see, I would probably make if all your bids filled, that'd probably make your overall setup something like this. And if you were targeting 25, I mean, that's a fantastic, where is it? 5, around there. Yeah, it's like a 9. That's like a 9-1. Really good, well-defined risk up here based on where the liquidity lays at the moment. So not a bad setup. If you're not really trying to ladder on high time frames like that, and you're more of like a smaller time frame scalper, then I'd probably do something like this. And you instead you would be entering here, entering at the high, entering maybe one more here at 27K, and then having like a conservative stop up here at like 27.2 or something. In that case, your setup would look more along the lines of something like this, and you'd probably just be targeting for a scalp. You'd probably just be targeting this value area here. Okay, so you can kind of see if you draw a little range box here. Okay, this level of support in here. Okay, this would be a level of support on this low 5-minute time frame. That would probably be where you're targeting. So, your trade setup would look something like this. Still 3-to-1 trade, not a bad risk to reward. Again, like you want to be shorting the rips and you want to be buying the dips. It's kind of the best practice. You just have to make sure that your risk is well defined and have a game plan going in. Don't short too early. Don't long too late. Don't try to long a breakout. Don't try to short a breakdown. Like that's not going to be an optimal risk to reward ratio. You're just going to end up, going deeply underwater if it doesn't go your way. Most people don't cut it in time, and then they end up underwater and they're trapped in a position. They end up having to crank up their leverage and then adding margin to a loser. And that's how you end up blowing up accounts. Like that is not the way. That's not the way we trade, right? I personally missed this bid. I was really busy with work today. I've had a lot of things going on. I totally missed this bid here. But right now, if anything, like this whole area up here, for me personally, the way that I trade, this would be where I'm looking for shorts. Okay. Nice consolidation zone. It's been tapped a bunch. Now we're retesting this from the bottom side for the first time since how long has it been since we've tested this red box from the bottom? Here. So like March. Yeah, it's been a while. Like this is definitely we only just broke back down through this. Like this is a good area to be shorting at. In my opinion. That's just the way I trade. Obviously, you guys can do whatever you want. It's not financial advice, but if we broke down through a pretty major level of support and we just dead cat bounced, I would definitely be looking at, shorting in this area because we're retesting it from the bottom side. A way that you can check to see if your trade plan is going to actually work is you can just invert your scale. So like if you switch this to resistance and you switch this to support, right? Like if this was a bullish chart right now, like you know damn well that you would probably be buying this support. Like that you'd be buying this. If you had a big blow off like this and then you retraced, you would definitely be buying this. And yeah, I agree with Ancient Alien on this one. It does seem like oops, I just spilled something. It does literally seem like everybody and their mother is waiting for 25K to buy. And Ancient Alien, I don't know if you were here earlier in the stream, but what I went over, let me flip my chart right side up so I don't fucking confuse myself here. Why the hell does this look more weird? I don't know. It looks weird. Now it looks kind of the same. I don't know. Anyway, whatever. It doesn't really matter. But what I was saying earlier in the stream is that on this high time frame, literally everybody and their mother and you guys, everybody that follows me knows that I love fucking head and shoulders patterns. I love them. It's like my favorite pattern to trade. I love trading head and shoulders patterns. But here's the caveat to the way that I trade head and shoulders patterns. I hate trading them on high time frames, man, because when it comes to crypto, they are just not reliable on high time frames. And everybody and their mother is waiting for 25K. And we just got this massive wick down and recovery on the daily chart today. Like that doesn't necessarily look to me like we're going to be continuing to the downside. Obviously, I could be wrong, but typically when you get a really big wick to the downside like that, typically that means that you're going to start heading to the top side. That's what happened here. That's what happened here. That's what happened in here. Okay. Like normally, here we had, well, this was a volatile day, but long wick to the downsides, like that's normally when you start seeing some kind of reversal. Long wick to the top side, we got a reversal. It works both ways, right? Start getting really high wicks here to the top side. Boom, bearish hammer, we reversed. Big wicks to the top side, boom, we reversed. Like, now there are instances where that's not a thing, where you get something like this and it's a liquidity test and then you keep moving in the same direction, but that happens less often than a reversal. Hi, mate, what is your opinion on meme coins? I know we all hate them. as they are worthless, yet they do run. If they run, wait for a 25K Bitcoin before taking a chance. Okay, so here's the thing. The more the Bitcoin bleeds, right, alts across the board, like forget about meme coins for a second. Just the market in general looks like garbage right now. Like alts are just bleeding out across the board. Like if I go to my alt list here and I scroll through some of these, it, like look at like almost my entire list is red here. Like it just looks terrible. We're getting into a super major value zone of AVAX. Like getting a chance to buy AVAX at around $10, huge area to be buying. There's a major level of support. Like everyone was buying, here, and then they bought here, and then they got washed out again, and now they're capitulating here. Like $10 or under $10 is like a super strong buy for AVAX, because if you're going to be a long-term holder on this, you're only going to have max maybe 30-40% drawdown, right? But at the end of the day, like just in general, like Blur got crushed. INJ. Overall, very choppy here. It looks like we're reclaiming a monthly support here. I'm just going to blow through these real quickly just to kind of get my point across. Like this is a major monthly support. We're bouncing off of this. For INJ, if this flips here, that's awesome. That's super bullish. But here's the thing, guys. The more that Bitcoin dies, the more that alts are going to get hit really hard. And most of these alts are not looking good. Most of them are either really chopping sideways or they're like clamoring at all-time lows. Like, look at this. What is this, comp? Comp's it hasn't even recovered yet. It's literally just ranging. But the good news is that it is ranging here. So if you're looking to accumulate comp here, which is compound, it's a DeFi, boom, 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 like getting a triple bottom here, attempting a triple bottom buy here on this, like long term. I'm talking spot. Like I'm not saying degen these and go hard. I mean like, oh, okay, like accumulate spot. What is this? $34 a coin right now. Okay, so like you pick up 10 of them. You know what I mean? Like you don't go hard and buy and blow your whole stack and buy 1,000 of one coin. Like, okay, you buy 100 of this, like $100 worth or 100 coins worth, like whatever is appropriate for you, like a small to mid-size buy. Aptos I think is garbage. Dash is just garbage. Somebody asked me to chart this. This was like sitting on major support, and now it broke down through this. So this looks like absolute trash. It's sitting at all-time lows right now. This isn't anything that I would touch. I still think that this is super overvalued. Atom, from the bottom to the top, it's sitting right around 382. This area of interest I had got tapped once, blown past, recovered, tapped again. And it may or may not get tapped again. If it does, great. If it doesn't, 618 and your golden pocket here is like $4. Didex just like fell off a cliff and died. It just totally flipped through this this level of support. Like this level of support did not hold here, which is very worrisome. Cody chopping, ENJ sitting at major support again for the second time. Like if you wanted to buy somewhere under like 40 cents or whatever, like it's back at that same level now. CRV just choppy and sideways. Like I like, this is not the kind of chart that I want to trade. Like I hope I'm making that clear. Like I haven't been touching alts at all. Oh my God, that looks really terrible. So this is the Bybit coin bit. And this to me looks like a potential head and shoulders here. Like if this capitulated one more time and we got one of these, that would be a very nice head and shoulders. This would be a buy here. So if anybody is still on Bybit or they're KYCing or whatever, where is it? There. That is your value zone right here. This is your value zone. This is a throw under. Here's your all-time low. Obviously, your all-time high is like way the fuck up here. I'm not even going to bother labeling that. But in general, you've got a pretty clear trend line there with a couple throwovers. You know, you had a little one here, had a little one here, big throw under here for a test of liquidity. This was, I think, during the FTX crash. So this was a black swan and then a triangle consolidation reversal. So that was the throwover, but this marked your all-time low. But in general, really nice, well-defined value area, really nice, well-defined trend line here. So this would be something that I would be watching, but I'm personally not interested in Bybit or any exchange that makes you KYC, so I don't really care. Polkadot just looks terrible. When you zoom out and you look at the whole chart, it looks like shit, right? I mean, it's right back where it started back 3 years ago. It's right back in the same spot. Like, if you bought this in 2020 and you never sold it, you literally wasted 3 years of time holding a fucking bag. You know, I mean, if straight up, if you bought this at $5 and you didn't sell at like 40 or 30 bucks, you're kind of an idiot. Like, like if you never took profits during this entire thing, and you had 2 chances here to take profits, like up in the high 30s, you even had a chance to take profit here of $15 and still make like a 5x or whatever, or a 3x or whatever on your money. But you know, like, yeah, this is probably an accumulation zone here. BNB has been looking like garbage. This is a massive resistance now. Really bad resistance at about 300. Trader Main is aiming for 25 to 22K. Basically, everybody is aiming for 25 to 22K. It's kind of ridiculous. We trade deep into the weekly breaker, in my opinion. Then we focus on the lower time frames to see if bulls decide to step in. Patience for now. Yeah, I mean, right now it's really choppy. I mean, yeah, just like getting back to Bitcoin here. I'll comment on that. I mean, I like that approach. My only thing with that is that I've been around in this space since 2016. My only problem with that is that every time, like clockwork, like you could literally go into a casino and bet on this. When the majority of crypto Twitter and the majority of the sentiment is like, oh yeah, I'm going to wait for this level. What happens? The level never gets hit. Everybody is waiting for 25, 22, 20. And what ends up happening? We get a very clearly defined high time frame classic chart pattern, right? Everybody's calling this a head and shoulders. Everyone's expecting 25, 22, or 20. That's what everyone's expecting for this head and shoulders pattern to complete as a reversal. Whenever it's on a high time frame like that, it just simply doesn't fucking happen. I can't tell you how many times, like there's countless examples of this happening. The last time that we got something this clearly defined and it worked out was way the fuck back here. Okay, when we had this big ascending wedge. Okay, and this is back in 2020, the beginning of 2022. We had this massive ascending wedge here. A lot of people drew it different ways. Some people drew it like this. Some people drew it like this, and that was the retest. Some people had it way down here. There's a million different ways. Like obviously, it's you know, whatever. However you draw your trend lines or whatever. But some people called this a channel, a bear flag. Some people called it a wedge. I personally called it a wedge. Because with high time frame patterns like this, it's better to draw them. If you notice, they're from the candle closes, not the wicks. Okay, that's just the way I prefer to do it. The thing is, this is the last time that we had a very high time frame. Like when I say very high time frame, I mean macro, daily, weekly, where we've had a real pattern, a real classical charting pattern play out. A head and shoulders is a classical charting pattern. Okay, this was also. Remember back here, look, you can replay the chart, okay? And everybody and their mother was like, oh man, this is 100% a giant head and shoulders pattern. Everybody knew that we were going to get a retest of 62K or that we were going to do this, reject here at this resistance, and we were going to get a massive head and shoulders reversal. What ended up happening? Well, it was close, but that's not exactly what happened, right? So we got the beginning of it. We bounced on support, hovered, and instead of breaking down to these levels that everybody wanted at 30K, what happened? We bounced and then we chopped for like 4 months. This is from January to when did it break down? About here. This is 4 months of price action that up, down, up, down, up, down, up, down, up, down, up, down. We got a fake breakout here to confuse everybody. And then it hovered and then it broke finally. After that, it slow bled and then it finally fucking broke down. And it wasn't a head and shoulders because at the end of the day, let me turn this off. At the end of the day, I can't delete these now. Apparently, when you replay something after you've drawn, you can't Control Z and undo it. At the end of the day, this tiny little thing compared to this and this is not a shoulder. That is not a valid head and shoulders pattern. And guess what? Neither is that. Okay, like this is also not a head and shoulders pattern. Like it took way too long. It's just not a thing here. Same thing up here, right? Everybody was calling for head and shoulders here. Look, left shoulder is in. Oh, look, the head is in. Okay, we got to, oh, look, the left shoulder is in. Everybody thought we were going to nuke here. Nope, we got to fake out to the top side and then a nuke. And it did not play out, okay? Just to give you an example of what that looked like here. Everybody knew that we were getting a head and shoulders here. Everybody knew it. Didn't happen. Did not happen. So these high time frame patterns, when you look at these on high time frame patterns, you got to be very, very cautious of these kinds of things on high time frames. Now, most people don't really deal with Elliott wave that much, so most people were not identifying that this is, like an expanding diagonal or whatever. And we had a little throw under here before a continuation. Normally, a megaphone like this is a continuation. Very depictive of, like a complex correction for a wave 2 in an Elliott wave sequence. But at the end of the day, I mean, this really 1, 2, 3, 1, 2, 3, 4, 5. And then this was your massive ABC diagonal. And then this was your 1, 2, 3, 4, 5 for your wave 3. And this is our wave 4, like just a simple ABC. And I think that a lot because of this complex, weird wave 4 that we got, and this is a 5, I think that what's happening is that everybody thinks that this is the top of the overall wave, but it's actually not. It's just wave 3 of 5. And this is just a simple ABC, a classic 3-wave sequence for a 4. I think everybody is overcomplicating what they're seeing here. And given legacy markets and stuff like that, maybe rate pauses, markets are going to take that bullishly. I really think that, we're in for one last, 1, 2, 3, 4, 5 up to be like testing these levels up in here. Okay. That's where this is honestly where I really think we're heading up into here. And then after that, I think that the party is over and we end up seeing basically a 2019 lower high, and we end up getting this. I mean, look, I have all of my chart stuff back. Like, how long have I? Hey Cobra, how long have you been in crypto? This long, like long enough to have seen this entire thing and all of like the whole chart, long enough to see all of it. And yeah, like this is really true. Like this whole thing was just like a massive fucking triangle. That this is very possible of what we're seeing now. And that we're not going to get an instant bull market regardless of the halving, right? We're going to get a lower high, another short bear market, and then a super rip. It's just looking like that to me here, to be honest with you. Let me go back and undo some of these drawings here. It's just really looking like that to me here. Like it just doesn't look like we get anywhere close, you know. Again, I would be glad to be wrong. I would love this whole thing to just be a wave 1 of 5 and we see some kind of correction down to 22K. Everyone thinks, oh my God, the market's going to die. It's over. And it's just really a 2. And, like a wave 3, like that would be like from there overall, like macro, like we're talking a while. This would, I guess, be into the halving for 2024. I think it's in May. So that would actually work out. But that's basically what I'm saying. Like, this would be a 1. Actually, I'll just get the fucking tool out. Where is it? Just to illustrate it. That would be a 1. That would be a 2. This would be a 3. This would be a 4. Wave 5 would break the highs, take us up to, probably like 100K or something like that. There we go. Something like that. Okay. And, in as a subwave or whatever, 1, 2, 3, 4, 5. We'll make that a different color. Okay. Like that's basically what I'm assuming is happening right here. And then this is our first actual, ABC or whatever, we take it down to maybe 25K. But again, everyone is really, really aiming at 25K. I don't think that we hit it. I think that we get some kind of a fake out. But we'll have to see. I hope that, I kind of try to present all scenarios, especially on like high time frames. I try to play and do my analysis on higher time frames, because I know that most people don't do that. They're constantly staring at like this 15 minute time frame, and like I mean, it's just like this is just it's just a clusterfuck. Like it's just, especially when you get things like this, like, oh yeah, let's nuke $4,000 and then have a 80% recovery and then keep nuking another 80%. I mean, like being able to trade this effectively is very, very difficult. So I normally don't even trade on a 15-minute time frame anymore, unless I'm like hardcore scalping. Normally I keep, normally I focus on the 1 hour chart. I play it level by level like this. There's so many levels in here because we've been so goddamn sideways in a $3,000 range for months. But I normally ladder bids or asks on a 1 hour chart, and I get my bearings on the 4 hour and the 1 day and the 1 day. And I use my monthly levels on the daily chart and just kind of see where we're at. This is a major monthly level. This is why everyone is calling for 25K. This is why I don't think that we get it. I think that there's a very good chance that today our low was put in here for this correction. I know that that's a risky bet. Especially when you look at the 4 hour chart, and you have these lines drawn for this whole consolidation, right? Got this whole consolidation here, a pretty substantial midline. And technically you're retesting the bottom of this bearishly. This is the only thing that makes me super bearish here, is that if you erase this line and you draw a resistance box, okay, like an appropriate one, not like something that's crazy blown out of proportion, right? Something like this. If you identify your order block area, we're retesting this from the downside. That's a super, like, that's a clear fucking short, right? Like if I know better, this is a clear short, and I would be looking for at least 25.2, maybe not 25K, but at least 25.2, like a major level in here, right? These major levels, maybe front run it a little bit and you say 25.3, but about $1,000 move, right? To the downside. Again, you can double check, flip your chart upside down, invert your scale here. That you'd be buying this support. if you were flipping it, right? Like for those of you guys that aren't great at trading bear markets and shorting, this is how I taught myself. Like, this is what you do. Oh, hey, would I long this here? Well, flip your fucking chart upside down and see if you would still long it. Like, would I short here? I just flipped my chart upside down. You're goddamn right I'd short right here. You know, because if my chart's upside down, that means that I'd be longing this. Like, this is a flip of support. I would definitely be longing this in expectation of, you know, seeing one of these. So yeah, there is that. I don't know. I mean, do you guys have, I know that there's still a couple of you watching the stream and stuff. I'm going to end it here in a couple of minutes. It's actually already been an hour. I started at 8:15. I started a little bit later, so I wanted to take it a little later. But if you guys have any questions, thoughts, comments, praise, whatever, before I go, let me know now. And, you know, I'll take those real quick, and then I'll probably wrap it up for the evening. Gonna have a couple more drinks, and maybe me and my wife will play some cards or something. I don't know. I'm old. I'm a boomer. We like play cards and fucking darts and shit because we're boomers. We sit outside with sangria and like citronella candles to get rid of the mosquitoes and like play darts and do boring boomer things. All right, the chat's pretty quiet, so I think I'm probably going to go ahead and roll out. Somebody also just left. Anyway, before you go, appreciate the love and support. Again, make sure that you check all of the helpful links down in the description below. If you have or have not already, make sure that you're following at VenomAlgo on Twitter. Again, tons of updates and stuff there. I actually just posted a thread yesterday about some updates that I did. Going to let the algo run like another week or so. You know, just kind of see how it performs with the next couple trades and everything before, you know, I kind of reevaluate anything. For those of you that want more information, there's a link, obviously, on my main profile on YouTube for the website, cobra-trading.com. I did just add a blog to there. If you're more of a reader for education, some of my older blogs about risk management and stuff are on there as well. If you guys are interested in that kind of stuff, I am going to be getting back to writing more. So let me know down in the comments below if you like written form content. I try to keep this stuff mostly educational. There's no reason for me to do weekly written analysis because I live stream every week, or usually every week. So they're kind of more along the lines of risk management, just stuff about finance, right? Like written articles that can help educate you in finance. So if you guys are interested in that, check out the new blog that the new page for my blog that I just put up on my website. Go check out all the VenomAlgo stuff. Make sure that you're following it on Twitter. That 15% off discount is still going on. Tons of users are clamoring into that, and there's a limited amount of spots for that. So if it's something you're interested in, I suggest you read the information and stay up to date on the VenomAlgo Twitter for that stuff. Anyway, I think that's pretty much all I got for you guys. I wish you all well. I hope you guys all have a very safe and lovely Friday evening. If you're in the United States, wish your mom a happy Mother's Day on Sunday. Don't forget to at least like write her a damn card or something. You know, she birthed you. Show some respect. But anyway, I think that's pretty much it. Again, if you guys have questions, comments, or anything else that you'd like to see in the future, or if there's like some kind of a section or a topic that you want me to hit on more in the stream, let me know in the comments below. That really helps me out. Obviously, do all the things like subscribe, all that cool stuff. And until I guess Tuesday, yeah, next week should be a normal week. I do twice weekly short form analysis videos that are like 4 or 5 minutes directly on Twitter twice a week. So those will be Tuesday and Thursday usually. So yeah, I guess until Tuesday, I will see you guys later. Again, I hope you have a wonderful, safe, and fun weekend. Happy Mother's Day. Wish your mom happy Mother's Day. Pat her on the back, cook her food or something. I don't know. But until then, I wish you all well and happy trading.